Good morning, everyone. In today's video, we'll start by first taking a look at the four major index markets. I'll go through that portion fairly quickly just to understand where we're seeing more volatility, what kinds of stocks would we want to focus on, and then I'll move into our stock volatility box live scanner. We'll see what's setting up real time at that point whenever we make the video, and then pick and choose from the live scanner to see where we have interesting trades setting up. All right, so let's get started first with our indice portion. And again, I'll try and keep this quickly. So today on the S&P 500, we were on our aggressive volatility box to start off the morning. We had broken outside of the scalper. The way to infer that, if you aren't familiar with our models, that's basically to say that, hey, today the S&P is a little bit more volatile than usual. We can't be scalping, but the aggressive model is working just fine as of right now, and we haven't really need to break out any of our more conservative models. That has not been true for the past few weeks, just as a heads up. Outside of that, in terms of our trades here, we've been looking for breaches, but really so far we've had only trending setups, which have all been winners, obviously with the S&P being on a really nice trending day. In fact, we probably have a breach coming up here in a few minutes, potentially, if we see price action in the S&P continue, and this would be a really nice breach if we do get it. If we go above the cyan line here, I'd be looking at shorting that the S&P, looking for a retest of that same magnet line of 4153.62, along with just our normal target with the S&P for that short, which would be about 8.45, let's say 8.5 points. We come in down 8.5, takes us a little beyond to get to this 4153.62, so it's a little beyond T1, but it's still pretty close where I think that would be a nice magnet. So that's the S&P. Nice trend move up higher. Each of our squeeze signals, the squeeze is really fired long, taking us nice into our target line. That was the first set. This is the second set, which also overlaps really nicely with our 1618 extension. And now it looks like we may be getting a breach. So keep an eye out for that. If we get the breach, maybe we focus on the breach instead of stocks. But if we don't see the breach, then we know we can be focusing on short opportunities in, say, some of the major holdings in the S&P as a potential alternative to shorting the S&P here. Now, after that, we have the DOW that we can take a look at. So the DOW in the morning, we started off being on our scalper models. So the DOW was least volatile. As the days progressed here in the DOW, we've had to adapt a bit. And so now we're on the aggressive model, where in the DOW, we even have an aggressive breach. So maybe we do skip stocks. We're seeing a breach in the future, so we can see how this plays out. Good deal of strength today in the markets, but what we're looking for is a bit of a pause here in the DOW. Now the setup is only valid once we see our red over, in this case, overbought arrow. Once we see that, we'd like an entry at the cyan line or better. And our stop is at 34,193, which is outside of the clouds with the $50 buffer. So far in the Dow, we're still waiting, but in terms of comparing it to, say, the S&P here, the Dow started off being a little bit less volatile, and now the volatility has caught up to the S&P. Now, if we move on to the NASDAQ futures, so if we zoom out of the NASDAQ in the morning, we had an open test where we breached our aggressive box. We were looking to see, hey, what happens? Do the buyers drive price action up, or do the sellers have any kind of control? We saw buyers were winning here, and that then took us from our aggressive to our doomsday aggressive models. What's interesting here is the NASDAQ was the most volatile to start off the morning, and now is the one that's not breaching any sort of volatility box edge compared to, say, the Dow, which started off on the scalper, but now we're inside of our volatility box edge zones on the aggressive, and same thing on the S&P 500 as well, or at least we're getting close to the entry line. 4162, and we needed to get to 4162.50. And then finally, we have the Russell that we can take a look at. And the Russell here today is the odd ball out. The Russell is on its scalper, has very little volatility. If you're looking for something that's a bit more predictable, a bit more stable, less risk, things of that sort, Russell's the market to focus in on. The Russell, we also have our squeeze signal, but most recently here, we had bearish market pulse, so no real clarity. Still just waiting, no setup yet in the Russell. But if the Russell comes up to the scalper here, I think that'd be interesting as well, considering the Russell's the least volatile of the markets. Now let's come back into the Dow, where we have, I think, the best shot at potentially seeing our aggressive models play out with the edge signal. So we'll keep the Dow here, along with, let's just say, the S&P as the two charts that we'd like to take a look at. So I can load in on the S&P the aggressive models as well. Come into our 1 minute chart, and let me just apply our style. Okay, so for both of these markets now, we've breached our cyan entry line. We've gone above our cyan entry line, And we're now looking for a bearish edge signal to let us know that, hey, this is officially overbought and we can now short this. The S&P here has a really nice 1618 that I think looks interesting. So our bias right now is more short. Dow has now broken outside of its aggressive. So we just adapt by clicking the Doomsday Aggressive models, and bam, just like that, we now have a new set of models to try and play this move, see if we get the edge signal inside of it, and really take advantage of really what was this parabolic move up. Can we have that equally nice crash move down lower? So that's the Dow. S&P here, we're starting to see that edge signal form. We had the first red candle. We'll keep an eye out. I'm leaning more towards skipping out on stocks right now and just focusing in on the indice markets, mostly because we actually have breaches there. So we may do that, but you should have an idea of how everything correlates now. Okay, so far as of this candle, we're seeing our edge signal forming. We still have about 30 seconds left for this candle to form, so we need to wait for that to happen. And then we know, hey, the edge signal is confirmed, the Dow's giving us a nice entry, and the S&P would need to retest the cyan entry line. All right, so now in both of these markets, we've had the edge signal. We are close to the edge of the hour, but we had the breach before the edge of the hour, at least in the Dow, and then in the S&P, we were at 848, so about 2 minutes short. So keep in mind, this is a bit more aggressive. You're looking to try and take advantage towards the end of an hour, but to me, the Dow here would be the market where you have the most edge. The S&P is also pretty close to its entry price and has that really nice 1618. So let's see what happens here. One way that you can also play this, for those of you that are interested, is if you come into SPY, and we try and find what that 1618 extension looks like. We have a very similar extension in the SPY as well, which is at 413.75. So let's say 414. So you could come into your trade tab here, SPY, and we'd be looking at the 414 puts. That's the out of the money 414 puts, currently going for anywhere between $1, $1.02. And we'd be looking to try and see if we can get that nice move down to our 1618. Keep in mind, we're also headed into the lunchtime hour here, so we may see a bit of chop, at least East Coast lunchtime, 9 a.m. Pacific, excuse me. So we may see the markets go sideways for the next hour. We'll keep that in mind, but you have a few different ways that you can play this. All the rules are met. Now we're really just looking to see if we hit our target. Now, in terms of targets on the Dow, we're looking for a move of right around 62 points from our cyan entry line. So that takes us to right near that 34,083 mark, 34,083, 34,084. And then in the S&P 500, we're looking for right around an 8.3, so 8.25 point move. And if we come all the way down, 8.25 is close, but not quite at that 1618. So those are the targets. Our stop is outside of the clouds. We've given it a $50 buffer, which is inside of these labels here, and you can use the stop price for that. So now I'll let the video play. We'll see what happens to this trade, and then we can see winner or loser. We'll at least have some data points, a measure of how we got to the trade, a measure of the trade setting up, and then we can see if there was anything to learn from this trade. All right, so here we're seeing the move play out way quicker than we expected. Just a straight sell-off from our volatility box level. This was a nice trade. We're still not quite at the T1 level yet, but so far looking like we're just going to make a straight move down. For all people watching this video, please don't be disillusioned by this. This doesn't usually happen. It happened really nicely this time, but more likely than not, we see something like this, come right back, chop around sideways, maybe even have a bit of heat before then starting to see this sort of a move. Today, obviously, everything just working really nicely so far. All right, so we just hit that 1618. This is pretty much the end of the trade. Now, any remaining contracts, if you did have them, what I would do if I were in your shoes, the stop would be at break even. That's what we say, and we're now targeting the other side's great target line, which in the Dow, 34,042, and then in the S&P, that's 41,417.5. Let me zoom out just so you can see how these moves really translate on the bigger, just broad zoomed out view. And then what we're looking for in the S&P, which I think is closer, is if we get a touch of our cyan entry line to now go long, reverse this position, and again take advantage of the same trend that was, which is a bullish trend. We had a nice bit of sell-off. Everyone took their profits. We even got a chance to enter when everyone was taking their profits. And now we would be looking to re-enter when everyone is fearful, maybe thinking that, hey, the markets are back into sell-off mode. We can now take advantage of any volatility box zones. Keep in mind, the futures volatility box is meant primarily for day trading. You could use it for longer-term entries, but I'm not sure most folks have the tolerance to keep a futures contract overnight. But if you do, then you can use this very similar concept here to try and play moves into and away from major extensions, major zones, moving averages, say the 50 SMA, whatever it is, just using the futures chart. All right, so I think this is a good closing point or wrapping point for the video. We're also seeing a bounce up now in the S&P from it. If we do come all the way back up to the sideline, that would be a stop out on any remaining shares, but the first target has been hit. Now we're really just trying to be a bit more greedy, see if we can pull out in the S&P, another 6.15-ish or so points, and then in the Dow, something like 58 additional points. I hope this video was helpful in painting a picture of how some of these trades look like real time, how to walk through the markets, how to see what the morning volatility looks like, use that to try and influence the rest of your day, and really just do your homework in the first 30 minutes to try and set yourself up using probabilities for the rest of the day. All right, take care, everyone. Good luck trading, and we'll see you in the next update.